This year we were very focused on uprating of benefits. So in November there was sort of a big campaign looking at lobbying government to look to review the rate of benefits. Obviously the benefits freeze of previous years had left benefits already worth less than what they were in 2009, and the decision to uprate this year by 10% was necessary just to help people keep their heads above water. So yeah, there was a large campaign, and we did a piece for the Observer which reviewed how people's incomes would be affected by a 10% rise versus a 5% rise. So yeah, it's looking at how that record inflation was playing out for people, and just emphasising how important it was that benefits at least keep up with inflation. So looking at the figures that we've got, we identified that the average household would still be £75 worse off in real terms, even with a 10% rise in line with inflation, just reflecting that people's budgets can't keep up, and that inflation on lots of other things is above that 10% figure. So yeah, certainly low-income families are getting hit harder than the average household outside of our data set. We could see that in different household types. So we identified that couples with children, for example, had the biggest impact in cash terms due to their larger budgets to begin with. So they would have been £639 worse off if inflation rises hadn't been applied to benefits. Lone parents were also affected in cash terms, and it did disproportionately risk hurting those in work more than those out of work. Fortunately, the government made the decision to raise benefits in line with inflation, which has helped, but we're now seeing that energy bills are set to go up again 20% in April, so actually that is going to need renewing in the next year as well. So yeah, if you could go to the next slide, Janet. So we've broken this down with a new analysis this month. So we've pulled out of our data sets 114,000 households in 6 different local authorities across the UK, and we've modelled looking at how costs have changed for people this month and going forward. So we're estimating, looking at council tax going up 5%, social rents going up 7%, private rents we've gone with 5%, but as Abby showed, that can actually vary quite significantly by household and where you're based, and energy costs going up 20% in April as well. So we can see for a typical working age couple with 3 children in this case study, how their income, their costs, and their income after costs has changed with each row there. So in February, there was no cost of living payment at that point. So people's incomes were quite significantly hit by those costs. And even at that stage, energy was expensive, but you can see the growth of the energy cost inflation from £157 to £405 in April 23. You can see that impact then on their income after costs, so starting at £1,100 and then sort of permanently reduced down to around £900 throughout the last sort of 14 months. The cost of living payment does help. You can see on that last row that in overall terms, they've roughly stayed afloat, assuming that they receive that cost of living payment, but we know lots of households, for whatever reason, haven't qualified, or for example, disabled households receive less than those on means tested benefits, so it can vary significantly who gets that help. So yeah, so we're kind of looking at that working age family in particular, as they've got the largest budget, and that impact was sort of sharpest on them. But the other thing is to look at, if these inflation rates stay high, people's living standards are going to remain firmly lower. If we could go to the next slide. So this is looking at across 3 different case studies, and we've pulled out 3 different groups that we think are interesting to look at in terms of how they're affected. So pensioners who own their own home are a particular group of interest at the moment. A lot of local authorities are interested in how to do pension credit take-up campaigns. They don't have the potential to increase their income in the same way as other groups. So yeah, it's important to look at how energy costs are rising and they potentially don't have the means to find the money to meet that gap. We also look at that same working age family with 3 children, and then a working age individual living alone with a disability. Obviously, like I say, disability benefits have affected people differently, and also living alone is quite different as well, in that your budget is just smaller overall. So it will sort of help more to receive a cost of living payment in cash terms if your budget's smaller. For example, £600 wouldn't go very far for a family with 3 children compared to a lone individual. So yeah, if we could go to the next slide. So this is showing the situation now and going forwards for the next 6 months. So looking at April, this is anticipating that energy price rise, and that rise is going to affect people whose energy budgets are larger, but yeah, the support will be limited if energy prices are going up 20%. I think the thing to pull away looking at this 6 months is just how many people are already now in poverty. It's not necessarily about more people entering poverty. We've estimated that looking at single households, as of this April figure, 30% will be in negative budgets prior to the cost of living payment. The cost of living payment will bring that down to 15%, but the figures are really sharp. We've got a blog out at the moment on this, and I think it's just showing how many people now have entered negative budgets and poverty. So yeah, it's about now how do we pull those people back out of the difficulties that they're in. If we could go to the next slide. This is breaking down those energy costs just to show across 3 months and across those household types. And this just shows in cash terms how that impact on larger households has been significant. We're looking to redo some analysis that we did, which showed that those in larger houses, those in energy efficient properties, and those with more children or more people living in the property are just disproportionately exposed to those energy cost rises. So that working age household with 3 children has a far higher energy cost than, say, the single individual with a disability. And I think this just ties into some of what we're trying to do to try to help local authorities to target this. So there's a lot of different measures that the government has been talking around, looking at things like energy efficient homes, warm spaces. We're looking at what we can do with EPC data in our Lift platform, and it's just around how do we use data to target these individuals. Yeah, the energy cost rise, the cap is described as £2,500 to everybody, but that is just for a typical household. That can vary massively by different households, and it's really not an accurate figure to talk about £2,500 for, say, that working age household with 3 children. If we could go to the next slide. So this is looking at the change from February to where we're going to now. So this is kind of over the whole, I think 15 months, how households have ended up. So the cost of living payments have been supportive to, say, an individual living alone. In cash terms, their budget was already fairly small, so a large cash payment has been helpful. But as I said, those larger families, the cost rises of the last few months have just added up continually, are set to rise again in April, and more cost of living payments are planned for April, but it's still just barely plugging the gap of where their costs have risen so much. So yeah, the energy price rise going up to £3,000 in April, quite visibly still adding to people's income after costs and the cost of living payment. If we could go to the next slide. So this is kind of just to sum up some of those policy points that we're anticipating in April, and just where perhaps the concern needs to be. The government's energy price discount was £400 off people's bills. That's now ending in March. That was sort of phased payments. The energy price guarantee is, as I said, ending in April, and the government is instead going to lift the cap by 20%. That typical household figure will become £3,000, but as I said, that that 20% rise will be much larger in cash terms if people's bills are higher. As we try to explain there, it affects the unit costs, which I don't think have been released yet. So we'll know closer to the time what people's unit costs will be. But there's some estimates there of what the unit costs are. And as I said, a further £900 in cost of living payments are planned. That will be likely targeted to those on means tested benefits. So again, that effect that we demonstrated there with different household types, those smaller households will benefit from that, but it won't plug the gap for some of those larger households. And benefits will rise with inflation at 10.1%, as will state pensions. There was a positive announcement around the benefit cap rising effectively for the first time, but that will only keep it in line with where it was 12 months ago. It doesn't help to manage the fact that it's been frozen for a long time, and LHA rates as well, the same effect. And I think the other point probably to take away is just around council tax support. So obviously council tax rising 5% in most areas, but that effect will be disproportionate based on where you live. So for example, two authorities could have a Band D property where somebody's bill could vary from £1,300 to £0, depending on how generous the council tax support scheme is. So finding ways to help people who maybe aren't currently being supported with their council tax as well is important.